Hi everybody, hello friends. So here we are. I'm going to talk about taking trades using price action and EMA, but basically it'll be pure price action. So let's. I have not cherry picked any charts. What I've done is I have marked the session endings. Just to be clear, we are on the 5 minute chart, and I've got the EMA 9, 20, 50, and 200 plotted here, as well as the volume 20. Now uh, I I'll go to sale. We are on sale at the moment, and let's see here. For example, let's see the price action here. So price is open in the morning in 9:15 with a nice candle, and it's run up 4.32% in one shot. Now, very difficult to find out where the price is going to go uh, in the first few minutes, and it's very volatile. So it's best if you just observed it uh, uh, and did not enter the market. So unless you're using some opening range breakout or some other strategy, but again, there also it would be best if you gave the market 15 to 20 minutes, preferably 30 minutes, unless you have some setups that can run only during the breakout time, during the high volatile moments. Now, I want to either go long or I want to go short in the market, right? And I can only trade till 320. I have to square off for 320 because what will happen in 320 is auto square off. I'm using zero dark, right? So my broker will square off at 320, and I suppose most brokers will. So now, what can I take a trade here? This candle is formed. It's volatile. I'm not going to do anything for at least half an hour. I'm just going to watch which way the market goes. The market may go bullish, bearish, or sideways. Now, right now, what I see here is that the market is sideways. If you see here, the market is just meandering here from left to right. If you look at the candles, it's not doing much. It's just dragging on. So, what can I do here? And the price is also crisscrossing the EMA 9, which is the green colored line that you see here. So, I do nothing. I will just wait and watch to see if there's some sort of pattern or something develops. Alternatively, if you really want to be aggressive, what you can do is you can make a rectangle here as price is consolidating here. And on the breakout of this rectangle, you can place a buy order here and your stop loss will be below the rectangle and some buffer. Now, the ATR at this point of time is showing 70 pesos, so you can give it a buffer of 70. You can give it a buffer of 70 paisa below the bottom of the rectangle. And if you have entered, and if you would have entered here, you would have easily gone on to make some money. Let's say you entered here at 128.70, you entered at 128.80, and if you continue to stay in the trade and kept your fixed SL, you could have risen. You could have rode with the trend right up to 133.30. I mean, take the candle before, we'll not even wait for the last 5 minutes. So you would have sold it here at 133.05, and you would have made at least around somewhere close to 4.5 rupees. So this is one way that you can do it. But if you're not sure here, then you don't take a trade here. Just because you're watching this chart doesn't mean you have to take it. This is a consolidation breakout that we have taken. But these are too many candles, and if you have the patience and you're still watching this chart, then you can obviously mark this and then go and you made some money. Now, what made me decide that I'm going to take a bullish trade? It's very simple. Before you enter a trade, you're going to look at the various EMAs here, but basically the 200 EMA. The price is above 200 EMA, the long-term trend is bullish. So you should prefer taking longs rather than riding against, rather than fading the trend. What do I mean by fading the trend? I mean is don't take counter trend moves. Price is going upward. Can you see this EMA 200 is going up? Now this EMA 200, what does it mean? This means 200 into 5 minute candles. That's 1000 minutes. Now 200 candles, 200 candles back. This EMA is slowly developing up. Similarly, what is this 9 EMA? 9 EMA is the EMA of the last nine nine candles, and of course more weightage is given because it's exponential moving average. More weightage is given to the recent candles. It's not divided by the nine. More weightage would be given to recent candles, and that's the reason we prefer using EMA over SMA. The SMA gives equal weightage. So if you had done this here, you would have made money, but assuming you didn't go here, so you're watching. Let me zoom. Can we see something here? Can we see something here? Again, it's basically a bit, and price is just gone and just hovering around here. So basically not much to do. This is kind of sideways but slowly inching upwards market. So you have to be very careful here. Just enter for the heck of it. Chances are that your stop loss can get hit. Now, if you see that the volumes are also very sparse. The volumes are sparse here because it's consolidating. But here also, here you see some bit of volume. But then again, you have a candle like this. Can you see this? It's below the 20. It's below the 20 volume, the normal 25-minute candle volume. So again, not much happening here. Price just going up and down. People basically who went long here at the stop losses hit, and people who basically shorted here or shorted here at the close of this candle would again have the stop losses hit. Then again, price has gone down for a bit, but then you should not go counter trend like I told you. And if somebody did, they were going straight away. They are going bang on into EMA 9. So while this trade for a scalp may have worked out, it's not good policy because over a long period of time you're going to lose money. As it is, intraday trading is supremely difficult. It's going to take you a long time to become consistently profitable, and you should not be taking these risks unless you want to blow up your trading account or part of it, because blowing up your trading account is very easy in trading, and especially so in intraday trading. So once you blow it up, it's going to take you a long time to replenish your account or even to get back to break even. So you need to be very careful on the trades you're taking, and even the trades that you do take. Uh, Whatever I'm teaching you here, it's only a probability. There is no holy grail. There's no guarantee. Even the best strategies will definitely hit your stop loss. Not once, not twice, but multiple times. But over a period of 100 trades, if a strategy is giving you good results, then you're good to go. So here we have the price candles coming down here. It's taken support here. If you see here, there's a small wick here. You see the wick. So basically, price has gone down to 130.5, and closed at 130.60. Is recovered by 55 paisa. So this basically took support at the EMA 20. EMA 20 is 130.25. So this price has gone below that, but then has come up. Okay. Sellers try to bring it down, but buying pressure bought it up again. So here, this candle, if you look at the close is 130.60 and the EMA 9 is 130.58 here. You would not want to take a long trade here because the candle is not even closed under the 9 EMA. So we do nothing here and we have this candle. Now you never knew, now that this candle is green, you think that we could have taken a long here and then stop loss below this and wow, I would have continued to make money. But please, please let me do something like this. You are here. We don't know the right side of the chart. Hindsight is always 2020. We don't know what's happening there. We don't know what will happen. So I would not. You are here. So you don't know. No, sorry. You are here. You don't know what's going to happen. Up, down, anything can happen, right? There's no clear trend here. If you see here, the price is just going slowly up and down, up and down, up and down. It's hovering around and taking support at the 20 EMA. So now, when I'm telling you something, please look at it from the candle at which I'm speaking. Don't see the right side and make assumptions. I'll go long here, I'll go short here. Because if I was looking at this candle here and it's developing, going up and down, Once if you have traded in the past and you watched each candle, you will notice it can become a doji. Anything can happen. It can go up and down and suddenly become a bullish candle or a bearish candle. So we wait for this candle to close. Now, this candle is closed above the 9 EMA. Price is above 200. EMA 9, 20, 50 all are sloping upwards. So we can assume that the price is going upward. No guarantees, obviously. So what you could have done here is there's a high at 131.50. So you could have entered in 131.60 and your stop loss would be below this candle 130.55, and you can give it another ATR of 50 paisa. So at 130 rupees, 130 rupees would be even below the EMA 20. See, EMA 20 is 130.37. So you can even make your stop loss 130.20, 25. So you would still have some support, or you can keep it as if you want to keep a larger buffer, up to you. So if you had entered at 131.60 and didn't trail your SL, you would have continued to make money till this point. 130.60, just a minute. 131.60 you enter, and I would like you to square off before this candle or in this candle, because we are nearing the last 5 minutes. You don't want your trade to be cut off by the broker. They're going to charge you some 50, 60 bucks or whatever plus GST as penalty for auto cutoff. So preferably don't wait till the 325 candle. I'm sorry, my mistake. Don't wait till the 315 candle to end. You sell immediately at the start of this candle. You don't wait. Now that I look at it here and you are coming here, so you have barely 15 to 18 minutes. Ideally, one should not take any trade after 3 o'clock, because sometimes price meanders up and down and you don't get enough time for the price to move. You can still take it, but then you would be forced to cut it off very quickly, because you don't want to enter and wait for the end of this candle. This candle end is the start of the new candle and auto cut off. So ideally, you should not be entering an intraday trade after 3 o'clock, preferably, because 20 minutes too lesser time. Sometimes, price will just do this. Then you have to take a time stop loss and cut off. Otherwise, you're going to pay penalty. Either you cut a break even, loss, whatever. So preferably don't enter a trade after 3 p.m. And definitely don't enter before, unless you're an expert price action trader, do not enter before 9:30. Preferably after 9:40, 9:45 is better, 9:45 a.m. Indian Standard Time, because then the volatility would have subsided to a bit. Unless you have a special strategy and you love going in that volatile period and want to log off after 9:45, then it's your party. You can go for it. Okay, so enough said here. We've gone long and all that. Let's look at another chart. We're going to look at Axis Bank now. Equitas Bank, I'm sorry. So this is basically my intraday, some stocks that I've added and some indexes. I keep them here so that I get an idea what's going on in the market. Now I'm going to reset the chart. Yeah. So we have something like, what do we have here? We can look at the last couple of days action. We can look from here. Price is below 200, and this is the start of a session here on the 1st of March. Price has gone down. You've got a morning star here. Let me zoom. You've got a morning star here, and then price goes up for a bit, and then you have an evening star here, and then you come down, and then again price. I think the market was sideways, if I remember, on 1st March. And that's the reason why you see the sideways action, and you will see it in most of the stocks. So you see the sideways action. What can you do here? One, you're below 200, so you're only going to take shots. So can we take a shot here? Do we know that this is a evening star? No, we don't. You are here at this moment, and if you were to be supremely aggressive and see this hammer candle and realize that This is a hammer candle, and buyers tried to, but sellers overpowered them. This is not such a first of all, this is not such a bearish candle. It's not it's not like, it's not like proper doji. Sellers are in control. There is some buying pressure, so it wouldn't do good to short here. But even if you shorted, you would be going straight into EMA 9. That doesn't make sense. So don't enter on such trades where the market is so volatile, going up and down, up and down. The price needs to be away from the EMA 9 or whatever EMA that you love and use and are comfortable with, and then you can go in. The trend needs to be established. You can't be trading, you can't be doing intraday trading in this range, especially such a small range, and especially when we are not at the extreme of the ranges. All you can do is scalping here, and there also you're going to be highly unprofitable because there's nothing here. People who would have taken a short here, their stop losses would have been blown off. Can you see this? And people who have gone long here in this candle, their stop losses have been hit here. So this is a proper bear bull trap. Anybody who tries to act over smart, shorts, gone. Long, gone. Short, gone. Can you see why I say short, gone? Can you see this? You shorted here, continued to short, and the next candle is a bullish candle. So your stop loss is hit, thereby fueling that fueling the price going up, because now shorts have covered with long orders, right? Now again, if you went long here, again the same thing. So all the people who came in here, either long or short, they lost their money. Only the brokers made money, and the treasuries, nobody else. So please don't enter here. Again, see this, absolutely horrible. See the wicks, see the small bodied candles, see the moving averages bunching together. Simply horrible. This is a very good time where you can, take a break, um, make yourself a nice cup of tea, splash some water on your face, do some basic stretches, and then come back to this chart again or any other chart. Now, see this, all of a sudden, somebody has pushed this stock up, and you can see the volume has gone tenfold. 13.7, 113K. So there is some big money coming here, and you have 1.9% increase all of a sudden out of the blue. Could be there was some favorable news. I don't know, and we'll not be able to track it now. But whatever the reason, whether there was a news catalyst or some other reason, all of a sudden, whopping zoop, it's gone up. You wouldn't have got a chance to even enter, but we didn't want to enter anyway. It's any which is here. Anyway, this candle is closed here. So but this is a very big candle. So some people may have put in a long order here, and their long order here and with stop losses here, and that is why when people shorted, uh, their uh, their shorts got added, and you see immediately 1.09 and 0.889 retracement. And now look at this, the candle has closed below 200 again. Absolutely pathetic chart. I mean, not the stock. I'm not talking about the stock here, but absolutely pathetic chart for us price action traders. What are you going to do now? It goes up, it comes down again. Again, there is no clarity whatsoever. Now, then again, the next candle, buyers have tried a bit, selling pressure at the top. The high of 101.15 and it's closed at 101, so 15 paisa off the top. That's selling pressure. You wouldn't want to go long here because this is what we have seen so far. It doesn't augur well. But if you did go long here, you went aggressive. You said, "What the hell? I'm going to take the chance." You would have made some money scalping. Again, you see a red candle again here. So this is basically a very horrible chart. Nothing to do here. Let's look at one more chart. ENB. No. We already saw a bank. So let's look at Motherson. Let's not look at another banking stock. Let's look at Motherson. Now, I haven't seen these charts before preparing this video. I'm seeing it like you are. And let's go back. So we have what we have here is uh, the start of first March. So you have a candle. Now with this red line, it's difficult to see any wicks on top and bottom. So let's look at the price. You have an open of 19. So almost your open is equal to low and your high is almost equal to the close. So it's a nice candle. But the very and the price is above EMA 200. But the very next candle, you have a bearish bar again with buying pressure, but not able to do anything. Selling pressure increases, then buying pressure, then selling pressure increases again. Finally, you have gone below the EMA 9. You have candles that have closed below the EMA 9. Now, in such a case, what can you do here? Like I told you earlier, the price is above EMA 200, right? So you should preferably be going for longs. But what if you wanted to fade the trend? You want to fade the trend for a quick scalp. Now, there's a risk here, obviously, when you're fading. So what are you going to do here? So what we can do here is this trend is forming. You've gone below here. Should you take a short here? I wouldn't. I wouldn't take a short here simply because uh, when the price is trying to go down, EMA 20 is going to provide support or fight it. You don't want to bang your head against a wall. Well, this next candle is closed below EMA 20 as well. Do I take a short here? If you want to, you can take a short, but what is the guarantee that this candle is not going to be a bullish candle? Do you have any guarantees? You don't basically. And for example, if you took a short here, let's see, took a short here at 118.60, you would have barely got anything before the price is again moving back and taking away your stop loss. That's why I said this is a range bound. This is a range bound chart. Now, in a range bound chart, what else can you do to take a trade? So, for example, if we are here, we can do something like what we can do is we can mark resistance and we can mark resistance here. Here we'll mark support. So, price is above EMA 200, but the price is going up and down range bound. Now, and it's all jumbled up. First of all, this is a very unsafe place, very unsafe place to be trading in because there is no clear trend direction. Price is going up, down, up, down. So, like I told you, I wouldn't take the trade here. I wouldn't take the trade here. So, now, for example, you have this big spike and price seems to have broken through support. Now, will you short here? If you had shorted here, the very next candle, your stop loss would have been taken out and it's going in. Now, there is this green candle, right? There is this very green candle and it has gone up above the support. So, can I take this? But this green candle is below EMA 50. Do I want to take the risk that this will hit 50 and come back? I will not take a trade here. I don't know about you. See, I can easily tell you once this chart is done. I'll. It's so very easy for me to tell you. Oh, this candle is so nice. It's broken this. Take go long above the high, and there you would have got so much. You could have got out here. But that's just fooling you guys. And I don't want to lie. I wouldn't take a trade here. If you want to, please go ahead. I don't want to bang my head against all these EMAs. So even though price has gone up, there was no guarantee that it would go up, and this is not a high probability trade. Now what can we do? So we made this resistance, we made the support. We have, we know one thing, that price is going up and down, has gone up. We have this clear doji bar. We have the wick here. So After these two, and you are at resistance, you can take a risk of going short below the low of this bar. 119.70 is the low of this bar. You can go short at 1196, and your target would be this line here. Or if you don't want to wait that long, let the price go down, and once the price crosses EMA 9, you can immediately trail your profits, and you would have been cut off here. Your SL would have gotten hit, or you wait for the first candle to close above the EMA 9. Up to you how you want to do it, but you can definitely go for a trade here because there's confluence here. You already have a wick here at resistance, pure doji bar here. So this candle is not yet formed, but you have still put in a short order and you would have made some money. You let it ride. As soon as you see this green bar, you realize that price is not able to go below. So after the closing of this candle bar, you should immediately sell. Should not even wait for this candle to form. So you would have made 119.60 and 119.60, and you would have made 60, 65, 70 paisa. You would have made 70 paisa. Around 70 paisa you would have made, and your stop loss would be above this above this above the high of this one, because you already have a spike here. So this is how resistance is helping us, and that's the reason we can take trades at the edges, but you have to look at confluence. Just don't take trade blindly. We saw two spikes here plus resistance, so then we decided to go for it because we clearly had a pattern here where things are going up and down. Right now, come here, the price has gone up again, come down, come down. See, now you are again at support. So long, we could always have taken longs because prices are above 200, like I told you earlier, which is a good rule to follow. Can you see here that the low, there's a very thin wick because the low of 118.40 and a close of 45. So price just retraced just a bit, and then you have this doji. Let me maximize so that you can see it. Otherwise, it's very difficult to see. Can you see this? Nice hammer. And this hammer with a very, very slight body, open is not equal to the low, and the high is the close. So just 5 paisa, but the bulls won. So you have a wick here, you have a wick here. Two times you have stuff here, and you are at support. So you will go 5 paisa or 10 paisa above this candle. Let's take it at 118.60 and 118.60, and you would go below the low of this 118.35, and you take another ATR. So 118 would be your SL. You're giving breathing room here for a little spike below, and 118.60 you enter, and you would have simply made money. There you go. And if you didn't move your SL, you would have remained, assuming you didn't sell here. Obviously, we can't pick the highs, and you just waited and you sold here. You would have still made some money. If you didn't sell after this, you didn't sell after this. Ideally, you have a bearish Harami here, but you don't know. After this, the price can again go up. So again, up to you. Or if you feel that you made enough money, it's time to go, then you can go here. Or you can trail your SL, or you can trail your SL and wait for your trailing SL to be hit. No right or wrong. So let me reset the chart. I think you guys have got a decent enough idea on how to trade intraday using pure price action. I haven't used indicators. I'm using price action and pure price action. So I'm going to be coming up with further videos on how to trade intraday using price action. But I think this is a good learning here for you guys, and hope you like the video. And If you like it, you learn something from it, please like the video, subscribe the video, forward it to people who are seriously interested about learning about trading. And I'll wish you all the best for your intraday trading, and I'll see you in the next video. Thank you for watching. Bye.